Alright, hello and welcome to Camel Finance. I'm your boy Camel, and I want to start by saying that PayPal is shutting down people because of their political opinions. So just imagine if the only cash around for you to use, the only thing available, the only medium of exchange is a central bank digital currency. Think how easy it will be for the state to punish you by banning you from buying or selling. So this could be anything they decide for any reason. It could be a tweet that you sent. It could be a Facebook status from when you were a 16-year-old. They could just decide for any rhyme or reason they're going to take your money and there's nothing you can do about it. So you better opt out and you better choose Bitcoin to do so. Binance has created a global advisory board to advance crypto regulation worldwide, and this is going to be the theme for the news over the next few tabs. You're going to see this when I say worldwide. Check out this awesome stuff that's happening. The Middle Eastern Payments Gateway has enabled 5,000 merchants to accept Bitcoin in Bahrain. Okay, this is massive. The Middle East is embracing Bitcoin and there's a lot of money over there. Estonia grants its first Bitcoin and crypto license to one of its banks. Israel issues the first Bitcoin and crypto trading license to local exchange. So are you seeing what's happening? Are you seeing this? This is going global and it's building momentum each and every day. Coinbase is approved to operate in the Netherlands. We're seeing Russia's central bank and the Ministry of Finance agree on a draft bill to use Bitcoin and crypto for international trade. How many orders of magnitude higher is the price going to go when they start to actually use this as a medium of exchange for international trade? When they start to settle commodities like oil in Bitcoin? How much money is going to flow into this space? This is going to be the bull run of all bull runs, in my opinion. The Bitcoin reserve risk is at its lowest level ever seen. Confidence amongst long-term holders for Bitcoin does not get any better than this. As you can see here, we are at the lowest level of all time in terms of reserve risk. At the same time, people are still expecting this one more dip. They're saying we haven't experienced true capitulation, but we're in one of the deepest periods of realized losses ever, as you can see. And if you look, we are coming out of it right in time for that final dip down into the 11th of November, the last 60-day cycle low. Potential bottom pattern is in play for Bitcoin. As you can see, the trend score, when we get a trend change, we go from dark with a trend score of 1 to light with a trend score of 0. And as you can see, in all prior bottoms, we went from dark to light and then emerged, dark from light and then emerged. And now we have gone from dark to light. This is certainly the time to accumulate. We're also at the highest sat value since the start of this month, with $1 now buying you around 5,424 sats and €1 buying you 5,333 sats. Remember, the long-term target is at least $1 per sat. So $1 now invested could be worth $5,424 if we can finally reach parity with the dollar. And I would consider that mission complete for Bitcoin. With more people than ever thinking that we're about to take out the lows, myself included, beginning to turn bearish. Not bearish until we lose the lows. Not yet bearish. Still hopeful we can hold the lows. But running out of time, running out of space, running out of price action to be able to defend that stance. Miles does make a good point though. You really think the great collapse is about to happen with everyone tracking it on a 2008 fractal. The Big Short 2023 cast is going to be big and the plot mundane. So the point he's making here is everyone is watching this. Is this a crowded trade, or is this the first time in history that the crowd is right? If you don't know what the 2008 fractal is, I'm sure you probably do, because this is the most loved fractal ever at the moment. When I posted this, you can see the price is up here. Since then, we have made it all the way down to around here. So we are dangerously close to taking out the lows. It could still form a double bottom. If we're going to, then we ought to come out of here. The daily cycle low count for the S&P is kind of telling us to be open to more downside, which is a little bit disappointing, but it is what it is. I found this, I'm not sure how much weight I put on this, but break this down. The black dotted line at the top is 2 standard deviations above the average line, which is the dark black line in the middle. And then the black dotted line at the bottom is 2 standard deviations below the average line, which is the dark black line in the middle. All of these faint colors in the background are prior crash analogs, and we are currently in the blue. This is 2022, this blue line here. And so what this suggests is that we are 2 standard deviations away from the average crash, so we should be able to expect a mean reversion, or said another way, a rally from oversold conditions fairly soon. Again, I don't know how much weight I put on this personally, but I did think this was kind of an interesting way to look at the data. Has the tether FUD all played out? Did the market get wiser? The USDT against the US dollar pair never actually wobbled out of range. It failed as a leverage short for the hedge funds that were shorting it. So why am I bringing this up? Well, this Tether FUD gets recycled over and over and over again. There's a lot of people that like to speak with conviction as if they know what they're talking about, as if they know what they're saying to be true. And they like to push these narratives that the Tether was unbacked and that they were surely going to be audited, and eventually people would figure out that they've been creating money out of thin air and using it to prop up the Bitcoin market. And people like me, people like Adam, who truly understand Bitcoin, were the first people to come out and say, there's no way, this is not how it works. Tether is a very important piece of the puzzle. It cannot, even if it was completely unbacked, it still cannot blow up the Bitcoin market. And people are very quick to point at these things and call FUD and spread the fear and uncertainty and doubt. But I want to ask the question, and this is why I'm bringing this up, where are they now? Where are those people that maintain that this stuff is unbacked? The hedge funds that shorted it, they got nowhere. Even if it was unbacked, it represents a small amount of volume. There was all these fake numbers going around saying it's 30 or 50 or 60% of the volume is traded in Tether. It's nonsense. It's absolutely nonsense. The Tether market cap was like 7% of Bitcoin at the time the FUD was going around. It can certainly cause a short-term impact, but can it create a Bitcoin to zero? No. So I'm just pointing at this to let you know that the people that truly understood this and the people that were championing the Tether is unbacked narrative as FUD, myself included, are still championing that narrative. This is FUD. The Tether is backed. Everybody knows the Tether is backed. There's no doubt in my mind that this will come up again when we're in the heat of a bull market. This is going to be recycled. It's very effective FUD. It works every time. So just remember, Camel told you, don't worry about Tether. Taking a look at individual investor sentiment, what we can see is everyone is bearish right now. So is the herd right? Maybe. It certainly looks that way increasingly. It certainly looks increasingly more probable that the herd is right. There are only 17.7% bulls left in this market. So me being somewhat bullish, increasingly less admittedly of late, but makes me highly contrarian in my posturing at the moment. Of course, open to flipping bearish, as I keep saying, if we take out the lows, but the lows are in until they're not. This is as pessimistic as we've been. There's only been 4 times in history when we've been down at this level since the survey began, all the way back in the 80s. And the same data, but displayed in a different format here, shows that historically speaking, the 1-year returns, whenever we've had one of these signals, are 22%, 31.5%, 7.5%, and 57%. These are the historical returns 12 months out after we get one of these signals. What's interesting is you can see that often we have to first sweep the low. We make the signal, then we sweep the low, and then we go. So it does tell us to be open to sweeping this low, perhaps taking the low out and then starting an uptrend. That would certainly surprise me. I think these lows either have to hold or we have to break down. I wasn't really looking for one of these final sweeps, but I guess we have to be open to that. The good news is, as a breakout trader, if we get one of these lows into that daily cycle low, we can draw a resistance line over the top, and then I will be able to get in and ride that just like I did with the last time we got a bear market rally. So one of these setups actually plays very well into my strategy, but admittedly I was kind of hoping to see a bounce out of here rather than an undercut. So we'll see how this goes though. More signal in the form of the FTSE 100 has always confirmed or led tops in the S&P 500, but it didn't in January 2022. And the question is why? Well, is it because this was not a full cycle top in the S&P 500? It was more of a correction. I was just looking at the FTSE 100 chart yesterday, day before, and I noticed this compression down here. And I have to admit, you know, as a breakout trader, I don't really care until it crosses that line, but a cross of this line will get me quite excited. I've done quite well trading. I think I took this one live on the channel. I think we got in here and then out into the top. So that was a really good trade. Looking to repeat that, but I want to be, if we start to lose these lows in the next couple of days, and I kind of expect this to break down. So that would be a nice short opportunity. If not, if we can continue to coil up here and then break this big line, that will be a huge, huge trade to the upside. So I will make sure I update on this. I am keeping my eye on that, even though I haven't covered the UKX in my charting sections of my video for a little while. But I do keep an eye on it, and I am watching this very closely. The gap between the 2 and the 10-year treasury yields is now the most inverted it's been since 81. And so when we get to these levels, historically speaking, this is usually about the area where the 2-10 yield inversion begins to reverse. We did a double tap back in 2000, 2001. Is that what's coming? Or are we just going to V it out of here like we did in 89? The last time the 2-year yield hit 4% was October 17 of 2007. The US debt was 9 trillion in Q4 of 07, and the US debt is now 30.5 trillion as of Q2. 61% debt to GDP in 2007 versus 122% debt to GDP now. The US has literally doubled its debt to GDP ratio in 15 years, and they're telling the public they can go higher for longer without causing a major recession. Either they're lying to us and never really intended to go higher for longer, or they're lying to themselves. And I wish the media would challenge Powell today and have him demonstrate the math and reconcile it with the Fed's perpetual BS positive GDP growth forecasts. So again, I've made a video where I show the maths for how they're going to just become increasingly bankrupt. They're already insolvent. They already cannot service their debt. So if you're interested in seeing that, go and check out the video I did called something like the USA is insolvent, and it will show you the maths of the breakdowns of the bonds and why I believe they cannot continue to hike. However, if they continue to hike through this month and next month, then I will be open to abandoning that thesis. Japan is saying enough is enough to the Fed. Now, this could be a spanner in the works. They have 1.2 trillion in treasuries. They could sell for dollars to defend the yen if they wanted to. This would make yields soar and cause instability in the US Treasury market, begetting Fed action to buy them and expand their balance sheet. So if Japan is finally about to say that it's had enough, it can, of course, put pressure on the Treasury market and force balance sheet expansion. This could be a massive spanner in the works for the US and its rate hiking cycle, as well as its balance sheet runoff and quantitative tightening program. Japan was essentially saying, you've exported enough inflation to the US. If you don't stop, then we'll force you to pivot. Good for them for standing up for themselves. They bought treasuries for a long time. It's time to use them to benefit Japan, not just the US. Could we see Japan force the Fed to pivot? Maybe. We will see. For now, the dollar continues to go on a tear, continues to make new highs. So when is this thing going to stop? Nobody knows. Likely when the Fed pivots and not a moment before. The S&P 500 getting pretty close to these levels now, aren't we? So again, the lows are in until they're not. This could, of course, still form one of these inverse head and shoulder patterns. Could do something like that. So will it, won't it? I don't know. The Nasdaq, similar story. We could argue that we are forming some sort of head and shoulders here. So will it, won't it? Again, nobody knows. A lot of people expecting lower lows. Maybe we get some annoying scenario to trade where we trend down, undercut these lows, and then come up from here, maybe, as the... Where was it? As this was showing earlier. It's a Friday though. Definitely not looking to take on any positions over the weekend other than the crypto positions. Oil looks like it wants lower, so that's good. Targeting the $60 to $65 a barrel range. Also good because it is not hinting that CPI will be really high, at least not in the energy sector over the coming month. Gold, still in no man's land. Like I said, bull trap would be nice to short. If not, break down from here because there's a good short entry. Silver kind of looks like it wants to break out here. Could be a long if it can break out. Maybe something like this. And I'm still holding these mining positions, which are kind of annoying. They've kind of just gone sideways. It's almost nicer to get stopped out straight away because then you know you were wrong. This could really go either way still. But long and strong. Continue to push. Not really worried about that, to be honest. Bitcoin... still kind of bleeding. Do we get a pump soon? Maybe. Looking for longs, looking to hold this level. As long as it holds this level, I don't really mind. And of course, the cycle low, the 60-day cycle low due around the 11th of November. So if we don't get an actionable trade, if it just kind of goes sideways or chops around like this for a while, then we get that drop into this 60-day cycle low. And that is the long of all longs, in my opinion. I will be long in MicroStrategy, Coinbase, maybe some other mining shares, Bitcoin spot, Bitcoin on leverage, possibly Ethereum out of this 60-day cycle low. So this is, for me, this is the last buy the dip opportunity down here. So that's the worst case scenario. I'll look for short-term bounces in the meantime, but I honestly think this is just going to kind of range into that 60-day cycle low. So prepared to play patient, but then I'm going to be super, super aggressive when we get down there. Ethereum is just kind of doing nothing, isn't it? I've lost all interest in this coin. When I see something tradable, I'll let you know. We did really well capturing the move from here to here. So hopefully we can get kind of a drop down and go again. I will let you know. In the meantime, XRP is continuing to break out. It likes to pump insane amounts. Is it just going to sort of top out, bull flag and go? I don't know. Long and strong, continue to push. I will take the risk off of this trade, I think, because I'll at least reduce it. I'll figure it out. I'll let you know. I will figure that out in a bit, but there's no need to let this go back to a loss now. It can go back to break even at the worst case scenario, I think. So Hopefully we can push up towards the top of this range. Is that a bit too ambitious? Maybe. I would think we can at least get up to the 90 range. So 90 cents, that would be a really nice trade. But for now, long and strong, continue to push. Still looking for this 10-year yield to roll over. This is an incredibly powerful trend, isn't it? But that's good because we can get a nice breakdown marker from this. Let me just increase my precision, something like that. So when this breaks, that will be a sign to go risk on in the market. But what could catalyze that? Maybe Japan, maybe a pivot, or maybe this thing is just going to rip higher and the US are just happy to go bankrupt. So we'll see. For now, going to play nice and patient, wait till next week. I'll be watching the stock market like a hawk. Really don't want to lose these lows. So I'll draw a little danger zone box, something like this, right? Really don't want to lose that. So we'll see what happens here. If you found value here today, I'd appreciate it if you could drop a like on the video. Subscribe if you're not already. If you have any comments, questions, queries, anything you want to say, throw it down in the comments. I love to read them. I love to hear from you. So anything at all, even if it's just to say hi. Enjoy your weekend. Take care of yourselves. Look after your families. All the best from me. Cheers. Bye.